Hello guys, welcome back to a new Tuesday, and plenty of things just happened over the night, and it's kind of interesting how the market is reacting to those announcements from USA. But first, US dollar has been somewhat of consolidated at the 100 level, 99, 100, 98, 100, that sort of level. And we still had gold as well rallying up, and I've mentioned that many times last week, that buy gold, because in terms of uncertainty market, that's exactly where we are at the moment. Like, we have a huge uncertainty around the whole market, and that's just getting bigger and bigger. That's just the beginning. It's not the end. Okay, a lot of people are Trump is sort of trying to make agreements with everyone now, but no, that's just the beginning. That's just the tipping point here is that lots of people are believing that is the end, but then market continues to rally. So that's exactly what is happening, and that's exactly what I've been saying, and I will continue to say. Well, I do have a few things. I do a few data points from USA. Yesterday we had the ISM Non-Manufacturing PMI that came in. Really interesting, but before we go deeper into those aspects, I need you to subscribe to the channel and give us a thumbs up, because that's what's kept me, give out the content, Dave to do all the editing, the whole group at ACY makes it, everything is possible to make this for you, and for free. Cool. So if you have any questions, don't forget to put in the comments and join us on the Telegram, because tonight, well, this afternoon, 4 to 5 p.m., we're going to be having the webinar. Okay, cool. So ISM Non-Manufacturing PMI came in to be released at midnight today into Australia time. And the consensus was 50.2, and the previous was 50.8. So it was expected to somewhat cool down the non-manufacturing PMI, but ended up to be 51.6. Pretty much 1.4 above what was the consensus, and 1.3 above, 1.1 above the previous. So that's pretty good for the non-manufacturing PMI. Remember what I said yesterday on the video? If you haven't watched that, it's really good. I really highly recommend you to go back and watch into the channel. We had the NFP last Friday, and that be 177,000 new jobs added to the economy on the month of April. But the interesting thing here is that the majority of those jobs are coming from two niche: warehouse and transportation. Those are the only two niches that were, had the biggest jobs addition. As well, we had the biggest job reduction that has been going until since January this year, when Trump actually get actually into the administration. We saw that the majority of the U.S. administration jobs has been falling, 9,000 by monthly. Okay, so that's already more than 22 to 25,000 jobs cut into the U.S. administration only this year, only on the first 100 days, let's say. So really interesting how all of the market is progressing. And then now we have the manufacturing PMI coming in higher, and that's what I believe it is. It's because of a high production before the tariffs, so that, because that's from the month of April, so high tariffs before production, and then now lower down because of the tariffs. Of course, they will be forced to produce more in terms of into the country, because they don't want to be paying higher tariffs from outside things to import outside things. And that will generate higher PMI, manufacturing PMI. Somewhat of a higher services maybe, but most likely higher manufacturing PMI. So my take here is, should we look for US dollar longs? Should we look for US dollar shorts? Well, when we have that sort of scenario, very uncertain, very interesting in terms of we don't know what's going to happen next. Literally, we don't know what's going to happen tomorrow, because just today we had 100% tariffs on Hollywood movies. So that's the only niche that no one was expecting to have tariffs, that is the movie sector, have tariff now. Okay, so it's really interesting how we can't, like, really, we can't expect anything, because expect the unexpectable. That's what I would say for Trump administration. Anyways, getting back here, I would suggest for us to, if you want to trade the US dollar, I would suggest to us, the market is risk on. It was risk on until yesterday, sorry. Now seems like it's phasing off a little bit to risk off for the gold has been rallying in the last couple hours, in the last couple days, last couple hours. So I would suggest for us to wait until the Federal Reserve interest rates decision and see what the Jerome Powell has to say again about the tariffs, because the inflation, the whole inflationary sort of, the inflation is declining, the inflation is coming down, it's not working, and we saw the higher print into the numbers for the last CPI, and you know, I guess it's really interesting how the market is pricing that into the market, into the actual price. So in my opinion, I would wait and see for this week until the Fed releases the federal interest rates decision plus the interest rates statement. If you want to know more about what's going to coming this week, don't forget to join me 4 to 5 p.m. in Australia time, Sydney time more specifically, for free. Just join me on the Telegram, and again, this is the type of I'm every single day sending daily analysis on the Telegram, and if you are not there, you're losing this type of content. So join us, it's on the description. The link to join Telegram is on the description, plus you get access to the webinars every Tuesday, Wednesday and Thursday from 4 to 5 p.m. Guys, thank you so much. I see you tonight, or I see you in the next video. Bye bye.